Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so we saw this chart on CNBC, and it's about real estate. And if you're worried about recession, that what you should invest in. This is not investment advice. We found a chart. We're going to talk about the real estate side of it. So I'll put the chart up. Are you worried about recession? Wall Street veterans suggest these three trading strategies. Okay, what caught our eye was the first one. It says buy healthcare, real estate, and utilities. They produce stable dividends and earnings regardless of the overall stock market. And we'll leave this up and we'll talk about real estate. So talk about recession and inflation have the same things in common. And real estate is something that tends to do very well during both of these.
Right. So real estate, so we're going to talk about what we know. So we know real estate, and this is our take on real estate. First of all, real estate, if you have a mortgage, it's a fixed rate mortgage because there really are very few variable rate mortgages out there. So we're just going to talk about it from the fixed rate mortgage perspective. So you are servicing that debt at a fixed rate. So as inflation keeps going up, you're actually paying back the loan with the value of dollars, right? So let me give you an example. $100,000 in 1978 is equal to $450,000 in 2012, okay? So if your mortgage was $100 in 1978, 1988, it was still $100 a month. 1998, it was still $100 a month. You see my point.
Yeah.
So your
but the $100 is worth less.
Right.
So you're actually paying less.
Right.
Yeah.
So you're servicing that debt at a fixed rate over time while you're earning more money because of inflation, that sort of thing. The other thing is, again, real estate, this is what we know. As your fixed rate mortgage remains the same, but if you have an investment property like a rental, every year that rent goes up probably about 5%. So if you're renting the property out at, let's say, $2,000 a month, then next year it'll be $2,100 a month and so on. So every year that rent goes up while your mortgage payment does not go up. So again, real estate works that way as being a hedge against inflation. If you look at real estate and if you look at inflation, certainly they kind of track similarly in the sense that real estate keeps going up. Inflation does not necessarily keep going up, but real estate does. So even when inflation doesn't do this, which is what it's been doing lately, real estate does still increase in value. So, if you bought a house 10 years ago, it's worth more today than it was then. If you bought a house 20 years ago, it's worth more today than it was then, and so on. Real estate works that way. Real estate tends to appreciate. It's a fixed asset. It's a real asset. It's not something that's trendy. It's not something that could evaporate, like maybe a stock if a company goes out of business. This is a real thing that will be here for the duration, barring some natural disaster like an earthquake, a hurricane, that sort of thing, depending on where that piece of real estate is located. So real estate is what we know, and we think that real estate is a good hedge against inflation.
Yeah, the other thing that people don't talk about is, there are these guys that make the videos where they say, oh, you should buy stocks, you should sell your real estate and buy stocks, because they show the chart of the percentage increase. But what they don't show, they only show the percentage increase of the gain of the asset. They never show the dividend, meaning the rent that you collect over many years. And if you have, here's a situation. Let's say you bought stocks and they're not dividend paying stocks, they just appreciate at 12% a year or whatever. And you have a couple bad years where they not only don't appreciate, they go down. Well, now your asset is being worth less money and you're getting nothing out of it. Well, if you had real estate, you would be collecting rent. You would have money in your pocket. So real estate is great for people on if they're retired and they own some rental properties. They know they have that income coming in. It's they're guaranteed to have income coming in. If you have stocks, your chances are what you're doing is you're pulling money out of a retirement fund or you're selling stocks to supplement your income. Eventually, you'll sell all the stocks.
Right.
They'll be gone, but you'll always have the real estate. I mean, you could sell the house, but why would you do that when you're collecting rent on it?
Right. So to that point, remember, if you're If it's an investment property and you're collecting rent on it, then those tenants are actually paying the mortgage payment, they're servicing that debt, and any leftover money goes into your pocket. Something else that people have done for a long time, particularly people like Todd mentioned, maybe retirees, they've done reverse mortgages where they've taken money out of their home and they've maybe invested that money in rental property to get some cash going, kind of with the thought that the property that they've taken the money out of will appreciate over time, and there will still be money left over for their heirs when they pass away. That's something that you need to talk with your financial advisor, see if that makes sense. And, make sure you talk with somebody who actually knows about reverse mortgages, because there's more misinformation out there than good information. They are a very viable product depending where you are in your life. And they are a great way to unlock that equity in your home without having to pay it back, because you don't have to pay it back and as long as you're living in the property. The only thing you have to pay is the property taxes and the insurance on it. Other than that, and the homeowner association if you have one. Other than that, you're good to go. It's a great way to do it, because let me give you an example. Let's say that your home is worth $500,000, right? And you just need a little bit of money to supplement your existing income. Well, you're not paying interest on the $500,000, just on whatever it is that you're drawing, and you don't have to draw it all the time. You draw it when you need it, and that's a good way to do it. I have helped lots of people who are the heirs of these people who took out reverse mortgages and then the heirs sold the property, and it works out really well. In most cases, the amount that's owed is pretty nominal. It's usually less than 50% of the value of the property. They have 6 months after the person who took out the reverse mortgage passed away to sell the property and clear the debt. So it works out really well. Just something you want to keep in mind, a way to generate some cash flow. And really, that's what real estate is supposed to do. It's supposed to generate some of that cash flow. Look, in an inflationary period, the people who get hurt are the people who don't own fixed assets that appreciate. Okay? In inflationary periods, the people who pay rent who get hurt. It's the people who don't own real estate who get hurt. The people who own fixed assets like real estate, those are the people that do well. Those are the people that get wealthier. So keep that in mind as you're considering how to use your real estate going forward.
Another thing you could do is a home equity line.
Right.
Like if you wanted to pull money out of your house.
Right.
Now, you could argue, but I called my banker and he said I could take a loan against my stock portfolio. Mm-hmm. The problem is it's at probably a much worse rate.
It might be.
Yeah, then generally at a much worse rate than at your against your home.
Mm-hmm. Right. So there are lots of ways to get some of that money out and use it wisely to either live off of or to generate more income so that you can have a better quality of life.
Another nice thing is that if you look at the stock market versus recessions, mm-hmm. the stock market tends to go down in recessions, but 5 of the last 6 recessions, home prices have gone up. Mm-hmm. So home prices are very resilient. We're not saying they're the end all be all and you should be 100% in stocks. We're not giving investment advice. We're certainly not 100% in stocks or 100% real estate. Obviously, we have like both, right? Like we think most people should, but there was this graph that came out. I don't have it, but it showed people of different wealth, mm-hmm. wealth classes, and it showed their wealth. If you're in the top 20%, middle, and then the next 20%, and all the way to the bottom. So it was mm-hmm. 5 groups of people. And what was most interesting about the people in the top 20% was they had equal amounts of wealth in like different buckets. Mm-hmm. So in real estate, in stocks, in retirement plans, things like that. They weren't all my money's in, I have a primary residence, I don't have any other assets, mm-hmm. or I've just got a ton of money in the stock market. The wealthiest people have it, they're more diversified. Mm-hmm. So, and when you think, okay, yeah, but what about Elon Musk? Well, he's an outlier because he doesn't own a house. So all his whole net worth is probably, if you took away Tesla and SpaceX, it's probably, he's not in the top 100 wealthiest people, maybe, right? That's all his wealth.
Yeah, but he has rockets.
Well, Twitter, he owns Twitter now. He has rockets. He has rockets, and he has
that's pretty awesome.
Yeah. So, but what's interesting is that you don't realize this, but some of these, we're not talking about ultra billionaires. We're just talking about people who are very well off. A lot of them own a lot of real estate assets, meaning they own apartment complexes or they own a couple hundred homes or something like that. And in addition to that, they don't just own real estate, they also have other assets. So if that's something like you're trying to ascribe to and you're trying to, move towards, then, real estate's a great asset. The other thing I see with real estate is that it's a pretty stable asset as far as the supply of it can't explode, right? Like they could go find a asteroid full of gold, and then they could say, hey, we can mine unlimited gold. So there could be the amount of gold in the world could quadruple in like a day, right? But that's probably not a good example. But real estate, that it's not going to happen. Like the amount of real estate it's actually been decreasing because they're not building enough homes to satisfy the number of people in the U.S. that are moving here, plus the small population growth we have. And then you have the older homes that are just getting older. So we need this new construction to happen. 15 years straight, we haven't had it. So, and in a recessionary times, remember what happens is building homes, slow. That's already happened. We saw a new home build last month was the lowest in 13 months.
Right.
For May, it was the lowest. It was a big drop, and they're seeing these recessionary things, and then real estate basically. And a lot of people say, yeah, but if we're in a recession, people lose their job, and they can't pay their mortgage, they go. But we just showed you, that actually the housing market's actually really strong right now. That you're not going to have this problem. Actually, we have a whole other video we're going to do where we go through all the stats about the housing market. So, and you're going to be shocked with some of the things about the amount of equity and the type of debt people have. It's going to blow you away. A lot of people don't realize this. Certainly the housing crashers, the people who say the housing market's going to crash, they don't have this. Either they have it or they don't care. But with all of that, obviously, if you want more of this great information about why real estate's so awesome, then you'll have to subscribe, hit the notification bell, leave us your comments, and we will see you on the next video.
Bye.
Bye.